The Australian share market is expected to rally following global equities' stellar performance overnight, while the slowdown of the US dollar is expected to boost commodity market sentiment today. My name is Jessica Amir, a market strategist here with Mumu. It's great to have your company for the daily this Wednesday, March 26. Well, the local bourse, also known as the local share market, has now gained 2.5% from that 2025 low. And we're just basically a hop, skip and a jump, or basically a 7.2% jump away from hitting that record all-time high that we hit back on Valentine's Day. February 14, for those of you that don't know Valentine's Day. So yes, we're out of a correction, meaning the market's no longer down 10%. And it's got nothing to do with the Australian budget being handed down overnight. And it's got nothing to do with the fact that there's an upcoming election. But we need to remember that markets move in cycles. It's not a matter of if, but when the Aussie share market will rise back to that record all-time high. And we'll cover that later on. But I do believe the market could potentially rally on up until the end of month and end of quarter, when we're likely to see markets stall and wait for the next catalyst, being the April 2 tariff deadline. And that could be a make or break moment, but we'll be covering that later on. Of course, the jury is out. We don't know what is going to happen on April 2. But if we dive into the NASDAQ 100, the pin-up 100, or top 10 tech stocks in the US, that's also extended its rebound up off its 2025 low. And that market is up 5.4%. Now, most of the buying and gains in US stocks have been in those stocks that fell the hardest. So Bitcoin holder, MicroStrategy or strategy, it's now gained 29% in 8 days. Applovin, that's the app maker in the US, a dominant player, mind you. Their shares are up 27%. Defense giant Palantir has also seen an absolute stellar rebound. We're just showing a chart of Palantir for those that are listening in on the podcast. We're basically showing that Palantir shares are up by double digits, 21% also in 8 days, up off that low. While we're also seeing the EV giant Tesla. Tesla's up 20%, and cybersecurity darling Crowdstrike is up 16%. What about locally? Well, investors really need to pay attention to what is leading the market higher here. Ignore the noise, ignore the politics, and ignore your ESG mandates. I say that because it's really important to take note that the stocks that are leading the market higher here are also the stocks that have fallen the most. We're also seeing, second of all, gold miners leading the charge, and also potential US tax cut beneficiaries. So if we have a look at some stocks that are leading the charge, it's really important to see we are seeing uranium and energy power stocks such as Boss Energy lead the gains on the local market. So Boss Energy is now up 26% in 13 days. A stock of a similar ilk, Deep Yellow, is up 13%. Now, the Labor government doesn't have a plan to bring in nuclear power, but these stocks are rallying on expectations that their revenue could lift because they are looking to sell uranium globally. And the market is expecting their revenue to rise, or rather also move to positive territory in the case of Deep Yellow. Boss Energy, though, the market is expecting their revenue to markedly move higher over the next couple of years. Separately, it's also worthwhile noting that Block, which goes by the ticker of XYZ, it's also the Afterpay owner, their shares have rallied 14% in 13 days. Why? Well, it's rallying on the notion of potential US interest rate cuts in the US and incoming US tax cuts. Please don't ever think that that Australia's planned tax cuts will boost the bottom line of this business. That's not the thinking at all here. The reason I'm saying that is because I look at facts. Block makes 93% of their revenue from the US. 67% of their revenue is from the Cash App. What is the Cash App? Well, it's an app that 1 in 3 Americans use to basically pay each other, pay stores, pay Uber drivers, etc. The list goes on and on. So do keep an eye on stocks that are rising up off their lows for good reason. But here is a note of caution. You might be expecting markets and gains to extend the gains that we have seen right up until the end of month. And it's important to note that we are likely to see this rhetoric continue until the April 2 deadline. That could see some bad surprises, and maybe froth and gains could be taken back. Now, that's why investors are not really throwing all their eggs into the stock market right now. They're being pretty sensible about buying investments and also taking profits off the table and trimming those winners when they see gains. So that's something for you to consider. But when I spoke about investors buying sensible investments, we need to think about stocks that are going to do well regardless of what happens on April 1-2. So gold, utilities, healthcare companies, they're likely to do well regardless. And that is precisely why we're seeing gold continue to push up. And we're also seeing gold miners do quite well as well. Utility assets such as Origin Energy moving markedly higher, up off their lows, as well as CSL, Cochlear in the healthcare space. In the consumer staple space, we've also seen Bega Cheese move on up. I guess that's something to smile about. We are seeing Bega Cheese move up 6% in 14 days. And Bega Cheese is the best performing staple stock in the Aussie share market over the past week or so. So there's lots to be said about that. For any more information that you want to find out about these stocks, head on over to Moo's app or leave your questions, comments and feedback in the section below. Have a great day. Happy trading.